Hello again, and thanks for tuning in. This is Brian Comer with Tom Lade. I'm with Berkshire Hathaway Home Services, the American Realty Center in Worthington, and Tom is with Cross Country, also here in Worthington. This is the fourth episode in our Think Like a Lender series, so we appreciate you guys listening and watching the last couple of series for sure. And today what we're going to be talking a little bit about is what really goes into the evaluation of my situation. In other words, when I'm thinking about getting a house and I talk to Tom, what are the key things that they're looking for when it comes to a loan? So, Tom, if you don't mind, give our viewers and our listeners a little bit of dialogue about what you're evaluating when somebody like me or one of my customers comes and starts talking to you about a loan. Sure. What are those important things?
Yeah, Brian. So, I mean, in reality, there's thousands of different guidelines that we need to make sure your loan meets. But really, there's three main ones. First one's credit score.
Okay.
So with credit score, we've got options down to a 500 credit score.
Mm-hmm. Yeah, I think you mentioned that before in one of our other videos, and there's some opportunity for you to help customers improve that as well. So,
yeah,
cool.
Exactly.
That,
so
guys.
We'll go over that. Second is making sure you have enough cash at closing. Our last video, we kind of went over some of the things that go into what's brought to the table.
Yes.
And anytime I'm working with you, I'll send you out a loan summary that'll list out the estimated cash due at closing for your specific scenario.
Cool.
And then the third one is what's called debt to income ratio. So that is the ratio of your monthly income compared to all of your liabilities, including the new mortgage.
Okay.
And the liabilities, it's what comes across on your credit report. So it's minimum monthly credit card payments, car loans, student loans, all those types of payments.
Apartment rent would be in that, right? The rental of your current apartment, or if you're leasing an apartment or something like that, or a home.
Actually, no, we're able to take that out.
Okay.
And then there's some other factors where if you got 10 months left on your car loan, we could eliminate that out of there.
Okay.
And fun fact, starting in May, the interest rates will be one of the factors in what your specific rates is going to be your debt to income ratio.
Okay.
So one thing I talked about on my channel is starting in May, if you're wanting to shop for interest rates, in order to get a 100% accurate rate, you're going to have an application.
You're going to need to do an application, right? I gotcha.
Won't be able to call around or just go on a website.
Right, because it's going to be very tailored to that customer or that potential buyer's specific financial picture at that point in time.
Yep.
So word to the wise, if you're thinking about getting a house in the April-May timeframe, it's probably time to start doing some of your pre-approval work and knowing what your buying power will be. Cool. So that's interesting. Just talk to me. I guess I didn't realize that my current rent or my lease payment for wherever I'm living is extracted out of that. I guess because you're replacing that with another, with a loan of a different sort, right, for all intents and purposes.
Yep.
Well, that's cool.
Exactly.
Well, hey, I'll kind of summarize here. We're going a little bit long. When it comes to getting a house, you need to make sure that you have a lender. Certainly, Tom is ready, willing, and able to work with you. He's here right in the same building as I am. If you have any real estate questions about what the market's doing, what homes are available, etc., please reach out to me. I'll drop both of our phone numbers down in the thread here. And we thank you for listening. Make sure that you subscribe, like, and share. This will also be on Tom's feed as well. Thanks again for hanging in, and we appreciate your time. Thank you.